What's going on, everybody? So let's take a look at the NASDAQ 100, the triple Qs. Okay, today, kind of a mixed bag. So, we started off the morning, some stocks spiked initially, put in, took out pre-market highs, took out that opening range, and then slowly but surely they started fading. And as the day went on, it got more aggressive and more aggressive and more aggressive. And realistically, that last hour of the market, it just really the tech stocks got pulled, and they got pulled pretty aggressively. If we just take a look at the triple Qs here, this big red candle here, this 12 o'clock candle, this is the last hour of the day. I am Pacific Standard Time, pulled all the way down to the 100 simple moving average on the 1 hour time frame. So from a technical analysis point of view, you would say, okay, pulled down to this level. Is this going to hold? After hours sort of chopped around a little bit, and then we just get more selling pressure. So again, big overall picture, I think the market is healthy. Where it starts to get a little confusing is if you're a day trader, you're a short-term swing trader, you're a scalper, you're holding positions right now, you're holding long positions, you're feeling the pain. Okay, personally myself, I did leave open a Facebook option. I still have a Tesla option on the table. Should have closed these out, knew better. Whatever it was, did not close these out. Here's the thing, and one thing that I'm going to really emphasize going into 2022, until this market shows us actively that we are trending bull market, or we are clearly in correction territory, bear market, and we are trending, we're trading below the 50-day moving average, we're working towards the 200-day moving average, or we start taking out these all-time highs and we allow all of these moving averages to catch up and all cross paths with each other and kind of like align the way that they should. Until that happens, this is not 2020 anymore. This is not even early 2021. Okay, we are heading into 2022. This last, I would say, 4 to 6 months of the year in 2021, market has given us rallies, yes. However, the moves are not holding. They're not too consistent. You can't just put on a swing trade on Monday, expect to come back on Thursday, and this thing magically be up. It might be up on Tuesday, might be back down on Wednesday, might be down on Thursday, might bounce and recover back to normal on Friday. That's just the way that the market is. That's exactly how it's playing out. It's not the best market conditions for short-term swing traders. It's not the best market conditions to say, hey, you know what? Let me hold, let this test some of the bottom levels here. Let me see if it go ahead and bounces off of these lower supports. Why do that? Because all you're going to do is risk losing more money. You're going to risk draining mental equity. You're going to constantly be checking the after hours futures. You're going to constantly be checking the pre-market movers. You're going to constantly be eyeballing these stocks. Find areas, whether that be long or short, potential setups that you know well and that you trade frequently. Trade the same core group of stocks. And if these confirm, whether that be long or short, take your position. When you get cash flow, sell out of your position, regardless if the stock moves up 3 to 4 points after you sell. Regardless of the stock break support and now you're trying to scramble and look around, going to bigger time frames, where can I find some more support to try to salvage a play that should have been cut? And I'll be the first to admit it. The Facebook play today that I'm in, I was profitable. I let it go green to red, and now I'm searching for those new support lines to see where can this thing possibly bounce. Can I possibly break even? At that point, it's too late. It's too late. I recognize it. I know it. The only reason, and this is not even a valid reason, but the only reason I gave these plays a little bit more leeway is because last week when we had that 4 or 5 consecutive green days, I had an absolute monster trading week, pretty much made my P&L for the month. So the way I was looking at it is I got a little bit of extra room. I have a little bit of cushion to kind of let these things wiggle around. When in fact, that goes against all of my rules. It goes against all of the way that you should be day trading. You should be scalping. Just because you're positive 1 week or 1 day does not mean that, hey, I got a little bit of more money to play with. Let me let this thing work. If the trade didn't work, it failed, cut the trade. Reevaluate the situation and look for another area of opportunity. With that being said, I'm going to go ahead and take a look at the triple Qs here. Taking a look at the triple Qs, what I am looking at here is potentially where are these going, where are these guys going to find a potential bottom at? Right now, I don't feel that there's a lot of market participants in the market right now. I think Wall Street is already checked out for the New Year's. I think there's a lot of selling going on. Tomorrow's going to be the last day for tax loss harvesting. So I think there's a lot of moves that need to still be done. I think that we still can get a continued fade. If we just do look at the daily time frame here, being that we did lose the 5-day moving average, we do have this channel that we're going to be coming up on here, and that's going to be around 397.35. Right in this area, 397.5 is going to be a little bit of support if we do start taking out these lows tomorrow. I understand right now in the pre-market we're currently trading at 398.98, but this 399 level is going to take out yesterday's bottom wick channel. If we do confirm that in the morning, I'm pretty confident that we're going to be coming down here to 397.57. The only problem with the market is it's coming down a little bit, giving you a bounce. Coming down a little bit more, giving you a bounce, or vice versa. It's going up a little bit and then it's pulling back to support. It's going up a little bit more and you think it's going higher and it's pulling back to support. So right now we're currently trading in a range. There's not a whole lot of follow through. There's a lot of choppiness going on in a lot of particular stocks. But right now the stocks are showing weakness. Yesterday, that perfect tag of the rising 5-day moving average was extremely bullish. However, today we just closed below the 5-day moving average. So for tomorrow, I'm a little bit, delta neutral, meaning that I'm not so much long biased or short biased. I'm probably leaning more towards sell bias just because it's the last day of the week. It's Friday. We have New Year's Eve coming. It's the last day of the trading year. I just feel that we can get a little bit more fade. We can even pull back into this 20-day moving average that's still going to be healthy, and then we can just explode next week. So again, kind of going back to that week of Thanksgiving, not a lot of volume, not a lot of market participants. What happened? They really pulled those stocks in aggressively because there's nobody buying shares. There's nobody buying stock. So when you don't have hedge fund traders, you don't have your institutional money flow, you don't have your big bets coming in on live options on the options flow, there's nobody around to open the door when these sellers come knocking. So what that means is we could get a drastic pullback tomorrow that may seem more extravagant than what it is. Meaning, for example, I could see us pulling into 397. I can see us pulling down to 395, 393. And then I can see us immediately reclaiming that level next week just because of the market participation. So what is the game plan? There's two game plans. Either you kick your feet back, you close out your positions, you wash your hands with this year is over, you kind of see what happens tomorrow, and then we start next week fresh. Or we can look for very, very short scalping opportunities, whether that be long or short, but we need to get cash flow and we need to get out of the trade. Or we need to enter the trade, see that it's stalled out, the trade failed, and we need to exit the trade. Okay. None of this get into the trade, give it a little bit more room. Oh, it broke this support, broke my trend line, but let me see if it bounces off the next level down. No, you get in, either it goes or it doesn't. And if it doesn't go, you need to cut the trade. Paper cuts are fine. We just can't start gashing ourselves at the throat. And that's what can happen in an environment like this. You lose one trade, you try to make it back. And then you trade again, and then you try to make it, and you lose a little bit more. Then you win some, then you give it all back. Either you're going to get follow through on the day or you're not. It's plain and simple. If you don't get that initial follow through and that first trade, second trade doesn't pan out, you're able to get out of there with minor paper cuts, tell yourself the trading day's over. I'll kick back, I'll watch the charts, I'll see the price action, but I don't need to invest my money from a day trading perspective, from a day trader's outlook. I don't need to be throwing my money around just to chop myself up, trying to force a trade, trying to find a trade. You don't need to do that. Let's keep a look at the overnight futures. Could we get more selling pressure? Absolutely possible. Do we find a little bit of a base and bottom out? And then tomorrow go red to green? That's completely, entirely possible as well. Keep an open mind for tomorrow. Stay calm. And if you don't see any setups that you know you like to play and that are recognizable to you, then just stay out of the market. There's no harm in not putting on a trade tomorrow. You know, the stock market's going to be open next week, and it's going to be open the week after that, and the week after that. When the market gets hot again and the action is hot, it's a lot more easier. We've been chopping around for over a month. You know, we had that breakout over 400. I thought we were going to hold that 401, 402 level today, and then we immediately gave it all back. So could that just have been an overshoot and now we're coming back down? Entirely possible. But again, we could be in a range. Just go ahead and take a look at the IWM's chart. They were in a trading range for over a year. So could you imagine if that happened with the triple Qs? I'm not saying it's going to happen. I'm just saying imagine it. Guys, if you want to join that Discord, it's down in the description box below. Also, give me a thumbs up and subscribe to the channel, and I will see you guys all on the next one.